investment team has about 100 years of experience in mining and in particular gold and silver. And it provides that unique experience where they're able to not only just sit behind a computer and look at spreadsheets and go through different models, but they're conducting more than 200 management team meetings a year. So they have very much familiarity with all the companies that they're investing in. And then we also have the members of the team that go out and will do up to 30 site visits.
Steve, thank you for joining us today. You head up ETFs at Sprott Inc., and you and your team have been very busy this year. You've established 3 new ETF products. Tell us about those products.
Yeah, the first one we launched this year was the Sprott Silver Miners and Physical Silver ETF. This launched all the way back in January. It's really a new take on what investors had access to. It's unique in that it's a pure play silver miners ETF that becomes extremely important in a market like silver, where if you look at the 10 largest silver producers, 0 of them are actually primary silver mining companies. This has a lot of economic ramifications around things like, if you're mining copper, for example, the price of silver is not going to play a huge role in your mining decisions. So by focusing on silver miners, we feel they're best positioned to provide investors that exposure to silver. It's also unique in that it's the only ETF that has a physical silver allocation to it. About 17.5% is allocated to physical silver. So for this, it brings a really well-balanced exposure to silver and the silver mining market. And then in February, we launched our first active ETF. This is the Sprott Active Gold and Silver Miners ETF, ticker GBUG or GBUG. It's the only active ETF actually that's focused on gold and silver miners. Those two make up about 95% of the portfolio. There's some ancillary exposure there. But it's principally a gold mining ETF. And what it does is it relies on our pedigree as a precious metals and critical materials mining focused firm. With that, our investment team has about 100 years of experience in mining and in particular gold and silver. And it provides that unique experience where they're able to not only just sit behind a computer and look at spreadsheets and go through different models, but they're conducting more than 200 management team meetings a year. So they have very much familiarity with all the companies that they're investing in. And then we also have the members of the team that go out and will do up to 30 site visits a year. And included on the investment team is an economic geologist who, for about 2 decades actually would go out and lead teams in exploration and setting up mining operations. So it's a very unique process and investment team that we have, and that's done quite well. We've seen assets now go over 120 million in that. Silver assets are and SLVR are approaching 500 million. So combined, there's a lot of focus on precious metals. And then our most recent launch back in early September is the Sprott Active Metals and Miners ETF, ticker METL or metal. It's our second active ETF and also the only active ETF that is focused on kind of a diversified or broad-based mining subset. So you think of a lot of the critical materials, so things like silver and rare earths and copper, a lot of the battery metals, uranium. They're providing exposure to those in an active format. It also has exposure to, or the ability at least to invest in things like platinum, palladium, steel. So it's a little bit more diversified than what you would see out of a critical materials ETF. This allows the investment team, again, a lot of the same managers that we have on GBUG. They're actually able to go through and target and dial up and dial down exposures to a lot of these different metals. Is very similar to our critical materials ETF, SETM, which launched about 2.5 years ago, almost 3 years ago now, has about 200 million in assets, but that's focused specifically on critical materials. Again, it's a pure play strategy, but it also provides that broad-based exposure that we've seen advisors have really come to appreciate as a one-ticket solution to critical materials exposure.
And you mentioned that the silver ETF is approaching 500 million. Why has that gained so much more interest or so many more assets than GBUG or the gold product?
I think one of it is a function of when it launched within the market. So it was right around the time when silver really started to catch up to gold in performance and move past. But I think what's really allowed it to get a lot more flows relative to existing strategies is the pure play nature and the physical component that we have. As we've been able to go out and really inform the investing public why pure play matters in a strategy like silver, investors have really shown that they understand that and have put a lot of assets to work in the fund as a result. And because of that, we've seen a lot of great growth in silver.
And it's interesting to hear that 2 of the ETFs have active managers. I actually thought that was a thing of the past. I thought everything was passive money now.
Yeah, in the ETF space, that's really where we're seeing a lot of the launches this year. I think the number's around 85% of ETF filings and launches are actively managed. So that's come as a lot of the passive strategies in kind of the easy open pasture has really been exhausted. So we do see, that's one aspect of it. And then we also have some legacy managers that were a little late to the ETF game, looking to bring their active strategies. But for us, it's really about looking at the market and understanding, who Sprott is as a company and our unique experience and expertise that we have and how we can provide better outcomes and more solutions to investors. So while we do have some passively managed gold mining ETFs, we thought an active gold strategy also made sense because it's a fit, a void within the market that happened to also align with our expertise and allows investors that are comfortable with active manager risk to have the outperformance potential that you don't typically get from a passive strategy.
And do you think this is going to be an ongoing theme that we're going to see in the coming years? Is there going to be more money leaving the passive side and moving over to the active side?
I think it's more so that you're going to see assets continue to leave mutual funds for ETFs. Typically, what you see out of an ETF is, one, you get the daily disclosure of holdings in most cases for active funds. That's the way the industry is moving from a non-transparent or semi-transparent model. So that's one major aspect. And also with ETFs, you have a lot of tax advantage potential built into the way that they are run from an operational perspective. So I think that's something we'll continue to see. Active versus passive, I think it really comes down to investor preference. So as you have investors leaving mutual funds, they may have a more active inclination to investing. So it makes sense to see the active strategies continue to gather assets relative to passive funds.
And I'm wondering if the move that you've seen in your silver ETF, if a lot of it has to do with the fact that people are waking up to the fact that we have this large deficit in the silver market. What are your thoughts on that?
I think that's definitely part of the case, right? So we have about 6 years of deficits that the silver market's been in. This year's also expected to be year number 7 in that. The other aspect of that is it's really transitioning from only a precious metal type allocation to also a precious metal and industrial metal. And with that, we have about 60% or so of the demand for silver actually comes from industrial uses. A lot of that comes from, semiconductor chips, photovoltaics, so the solar panels, the energy transition, a lot of uses for silver. So I think as the uses continue to increase, we see some structural deficits within the market and inability to increase supply quickly. We also talked a little bit about, the largest producers aren't focused specifically on silver. They have other metals they're mining. I think all of that paints a positive picture for silver moving forward as it's grown in acceptance and investor acceptance as well.
Steve, you mentioned the Sprott Critical Materials ETF, and I find this quite interesting because it's comprised of many different metals, one of which is rare earths. And we keep hearing about how important it is for the U.S. to secure rare earths. So maybe you can just speak to this and what are some of the names you have in that ETF and how it can benefit investors?
Yeah, so it really is that kind of one-stop solution for investors that want critical materials exposure. The ticker is SETM. We've seen over the last 18 months or so a very steady cadence of investor flows coming into the fund. In October, it actually had a record month for flows. So as the geopolitical tensions that we're seeing around critical materials and rare earths start to play out, we're seeing investors start to take notice and looking to position portfolios to take advantage of that. If you look at the exposure within the fund, you get about 25% or so to uranium, another 23 to 25% to lithium miners. And then from there, we have copper miners and rare earths combined. I think those four metals make up about 80 to 82% exposure. But it is meant to be broad in that case. So I think what you're seeing is a lot of investors not necessarily wanting to make a call on uranium or copper or rare earths. They understand that there are a lot of moving factors here that are lifting a lot of these markets higher, particularly as trade wars continue to loom on the horizon, and countries are looking to reshore a lot of this production away from China. It's really setting up a very positive landscape, we believe, for mining companies to see not only private investment, but we're also seeing public investment come from the U.S. government and other governments. One of the things that we've seen play out now for the last 4 or 5 months is the U.S. government taking equity stakes in some of these companies, MP Materials, Lithium Americas. These are companies that are mining lithium or rare earths, and they're actually looking to build out domestic production. And then also another company, Trilogy Metals, has some resources for copper in Alaska. We see the government stepping in to help build a road and get those resources online. So it's this general theme of looking to reshore a lot of these supply chains away from China that we're seeing not only public and private investment come into the landscape, but individual investors and advisors are really taking notice as well.
And you raise a very good point about the volatility of various metals, because diversification is very important. If you look at uranium in 2025, it's more or less flat. Lithium was just ripping, 2 or 3 years ago. Now it's, I guess, how would you describe lithium? Is it consolidating now? Maybe getting ready for another big move?
Yeah, we've actually seen since about June or so that lithium prices have rebounded quite nicely. And because of that, the miners have rebounded quite well. And we're starting to see more interest in lithium miners, whether it's from journalists writing about it, but also investors are starting to put money to work in lithium mining stocks. We also have LITP, which is our Sprott Lithium Miners ETF, starting to see more investor interest in lithium that we didn't see 6 or 8 months ago. One of the interesting things about lithium is, as the story for EVs, particularly in the United States, started to slow down, the hyperscalers and these AI data centers, as they've started to take over, are often now starting to include lithium-ion batteries as battery backup in a lot of these large data centers. So it's still a very fluid market, and we see a lot of interest there. It's also a market where we're seeing large oil producers like Exxon start to move into the market and produce lithium, which they can often do alongside of producing oil. So it's kind of a 2-for-1 from that standpoint. So we think there's still a lot of opportunity in lithium miners. I think the high prices that we saw back in 2022 or so are a ways off yet, but over the longer term, we think there's still significant upside for lithium and lithium miners.
And I'm sure the fact that the U.S. government got involved in Lithium Americas has also helped the sector.
It has, and that acted as a catalyst, not only specifically for lithium, but when you start to look at, rare earths and copper and other metals, we've seen, as these new announcements have come out, that a lot of these metals have benefited from that. And I think it shows, if we look back a year ago or so, the lithium market was falling and hadn't quite reached a bottom yet. But I think what that's done is given some optimism into the market that, it is a critical material. And we do see, even though there's a lot of production coming out of China, that the United States and its allies are looking to reshore that material. So that's providing some investment, I think, that wasn't necessarily readily apparent, within the last 24 months or so.
Steve, you had a very busy 2025. You launched 3 new products. What about 2026? I'm sure you have a few things lined up.
Yeah, there's always a pipeline that we're working on, and for us, we like to stay in our lane. So thinking about metals and mining and where we can lend our expertise to that. Typically, when we go through the product development process, it's a very thoughtful process. We're not looking to just throw a bunch of strategies at the market and hope one sticks. We're launching products that we believe have very favorable long-term outlooks. So that's why we've seen our critical materials suite grown quite substantially. We're now up to 12 ETFs total between precious metals and critical materials that we launched in the last 3 years or so. But that's really been a focus of ours, is not only is there a long-term trend, but then we also look at the market and say, well, what's available to investors? And if a strategy is available that's similar to what we're looking at, is there a way that we can add a significant improvement? And the way we've been able to approach our product development, when you look at across our suite, the pure play strategies is an area where we've really been able to add value. And probably the single biggest thing this does for investors is it really reduces the unintended exposures that you see when you start investing in some of these other strategies that might not have that same expertise that we're bringing to the table. As it relates to our index process that we've had over the last number of launches, we work very close with NASDAQ, and we're involved with them for the creation of new indexes. And then also a lot of these indexes apply a semi-annual index rebalance, and we're involved in selecting the investable universe for that. NASDAQ will then go ahead and apply the index rules. But it's really a way for us to stay engaged in the market and also make sure that our expertise is being reflected in the indexes and the new products we're bringing to market.
Well, this has been a great overview, and I want to thank you very much for sharing your thoughts on Sprott ETFs and how they can benefit investors. Another part of your job is also educating investors on why they should invest in precious metals, base metals, uranium or lithium. And you and your team do a great job of producing research and content. And if somebody wants to read some of that content, where can they go?
The easiest place would be to go to SprottETFs.com. We have an Insights tab there. You can click on that. It has a lot of our monthly commentaries. So covering a lot of these markets that we talked about, you can go there and access it. It's not behind a paywall. You don't have to sign up for it, though you can be added to our mailing list and get it sent to your inbox every month as well.
It's amazing how many people are putting up a paywall. And I don't know why, because there's so much free content out there, including yours.
Yeah, there is, and we believe that an informed investing public, it's beneficial not only for the ETF industry, but also what we're seeing out of critical materials.
Steve, once again, thank you.
Thanks.